In this presentation, we will record a sale on account. In other words, invoicing a client. We will be selling inventory items as we create the invoice within QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in our Get Great Guitars file. We currently have the open windows open. You can open the open windows by selecting the view dropdown and the open windows list. Now we're going to be creating an invoice. We're going to be creating the invoice here. We've created a few invoices in the past. I'm not going to go into a lot of detail on the steps, although we will step through it as we go through it. I just won't spend too much time on it. Notice that there is the difference between the invoice and the create the sales receipt. The invoice then is going to be something that we're going to create when in essence we are billing the client, have not yet received payment. The create sales receipt is going to be something when we have got payment at the same point in time. Therefore, in our scenario, if we have the guitar, for example, we can imagine that the invoice is something that we would create when the guitar was ordered, possibly online or something like that, and we're going to create and ship the guitar, therefore invoicing, expecting payment in the future, as opposed to the sales receipt being something when someone walks into our guitar shop, takes a guitar off the shelf, brings it up to the cash register, then we create the sales receipt. So we're going to be creating the invoice. We're going to create an invoice here. We're going to create the invoice for music store stuff, and we already have that customer set up, so we're just going to type in until it populates, and then I'm going to select tab, music stuff store, that's the one, and then the date is going to be February 19th. That's going to be the date that we will be using. Tabbing through this, and we see that we're going to want an Epiphone Standard Pro is the one we want. An Epiphone Standard Pro is going to be the type of guitar that we are selling. So an Epiphone Les Paul, an Epiphone Standard Pro, an EPSP Epiphone Standard Pro, and we will be selling one of those. The rate will be the $600. We do have the tax on it, and therefore, if we check this out, what's going to happen with the invoice? Well, we know invoice means accounts receivable will be increasing. The sub account of the music store stuff, the customer account, will be increasing, of course, for the full amount, the $630. The other side going to sales revenue. The revenue account, however, only going up for the $600, the amount that we charged. The difference being the $30, increasing the payable account for sales tax payable. We also know that the inventory is being sold, therefore inventory will be decreasing, not by anything on this actual invoice, but by the amount driven by the item that we have, which is the Epiphone Standard Pro. We can find that by going to the lists drop-down, item lists, look up the Epiphone Standard Pro here, double click on it, and it's going to be the cost of $480, as we'll see when we record this. Closing this back out, closing this back out. Obviously, we don't want the $480 on the invoice because we don't want to give it to the client. However, we want the invoice to drive the recording of the transaction for $480 on a perpetual inventory basis. The other side then is going to be going to cost of goods sold and expense account. Let's record this, check it out. We're going to say save and close. Let's open up our reports, starting with the balance sheet by selecting the reports dropdown, company and financial, scrolling down to that balance sheet standard. We'll then change the dates up top in the customized reports. Dates being from 01/01/20 to 12/31/20, and OK. So there is our report. We know that the accounts receivable then is increasing. Double clicking on the accounts receivable, we see that increase down below, that for the $630. Double clicking that $630, there's the total amount including the sales tax. Closing this back out. Closing this back out. Other side, going to the sales, which is on the income statement. We're going to select the reports drop down. We're going to go to company and financial, down to the, or up to, staying up at the income statement or profit and loss standard. And the date range is going to be 01/01/20 to 12, I got to sit tab, and then 12/31/20. There it is, the sales up top. That's going to be increasing. Double clicking on that. We see the sales, but this time only for $600. Double clicking that. That's going to be the sales price, not including the sales tax. The difference between the sales and the receivable, $30, will be going to a payable account. Closing this back out, closing this back out, back to the balance sheet. We're going to scroll down to the payable account, and that's going to be the sales tax payable here. It's at $203.37. Double clicking on that. We see the payable of the $30 down below with this invoice. Double clicking there. There's the invoice once again. Closing this back out. Closing this back out. Then we know that the inventory is going down. Here's inventory. Double clicking that. We see the inventory decreasing here. Is this the one we're on? Yeah, this is the one we want, and it's at 480. That amount, if we double click, is not on the invoice because it's being driven by the item, even though we can't see the cost in the invoice. Closing this back out, closing this back out. The other side of that then on the profit and loss report. Going to the profit and loss report, it's going to be in the cost of goods sold. Double clicking that. There's the 480. Double clicking that. There's our invoice. Closing this back out, closing this back out. Back to the balance sheet. We also know that the accounts receivable has gone up. Therefore, the sub account by customer should go up for music store stuff. We can find that by going to the reports drop down, company and receivables. We want the customer balance detail report. And then within the customer balance detail report, we see the $525 owed to us by Anderson Guitar. The total of the total report, $2,120. That amount then found on back to the balance sheet. The balance sheet at $2,120. We also know that the inventory should be decreasing by an Epiphone Standard Pro. It should then match the 2032. We could find that report by going to the reports drop down. We go to the inventory. We're going to go to the inventory valuation summary, changing the date to 12/31/20. And we know that the Epiphone Standard Pro went down. The Epiphone Standard Pro went down, and the total is going to be at the 2032. So here's the Epiphone Standard Pro. We don't have any more of those left, so it went down to 0, and we're at the 2032. If we go back to the balance sheet, there's the 2032. All right, so that was good times. Let's do it again. We're going to go back to the Home tab. We're going to create another invoice. We're going to be down here in the Create Invoice. This time we're going to create it for Smith Guitars. Smith Guitars. Selecting the drop-down. Don't see Smith. Oh, there it is. Smith is here. I'm going to type it in. And there it's populated. We're going to say Tab. Tab. This is going to be on the 20th. So I'm going to say plus on the keyboard one time. Tab, 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 tab. And now we're on the item. We're gonna sell. Smith wants a Epiphone semi-hollow body. So an Epiphone semi-hollow body. So we have an Epiphone. Here it is. Epiphone semi-hollow body that we're gonna be shipping out there, and that's gonna be one of them that he wants. It's gonna be $400. If we analyze this, what's gonna happen? And this is really good practice. Anytime you make a form, just think about what's the journal entry gonna happen, because most of the times, most people don't do that with the data input, and that's the point, because we set up the system so you don't have to think about that. You just input the data. But if you really want to be able to set up the system, analyze what it's doing, then it's good practice to think about what each form is doing. So invoice means accounts receivable is going to be going up. The sub account related to the customer, Smith Guitar, is going to be going up. The other side of sales, revenue, is going to be going up. Accounts receivable going up by $420. The other side, sales, only going up by $400. The difference between the two being a $20 to sales tax. That's a liability. It's going to go to a liability account. Sales tax payable on the balance sheet. Then we're going to also have the inventory going down, not by anything on this report, but driven by this item. If I wanted to know how much it would go down by, I can look at the item in the lists category. Lists, item lists. We're looking for a Epiphone semi-hollow body. So the list, we're looking for an Epiphone semi-hollow body. This one, double clicking on it, it's going to go down by 320. Closing this back out. Closing this back out. The cost of goods sold also going up by the 320. Let's record that. Let's check it out. This time looking at the trial balance to see all those changes in one place. We're going to say save and close. We're going to go up top to the reports. We're going to then go down to the accounting and taxes. Take a look at the trial balance. Within the trial balance, we're going to change the dates to 01/01/20 to 12/31/20. We know then that we have all the accounts right here. We could say, all right, accounts receivable, that went up. Double clicking on it, accounts receivable, there's the 420. Double clicking on it, there's the invoice for the full amount, including sales tax. Closing that back out, closing this back out. The other side should be going to revenue. Revenue's right here. It's on the income statement. It's down below on the trial balance because this is where the income statement accounts start. Double clicking on the merchandising sales, we then see the 400 rather than the 420. Double clicking on that, that's the amount we charged, not including the sales tax. Closing this back out, the difference $20 then, a liability, which will be increasing the sales tax payable. So here's the sales tax payable. Double clicking that amount, we then see the $20 down below. Double clicking that amount, there's the $20 related to the sales tax. Closing this back out, we know that the inventory also went down. Here's the inventory account. Closing or double clicking on it, we see the 320. That amount, if we double click on it, not on the invoice anywhere, but is being driven by the item here as we saw. Closing this back out, the difference between that or the other side of it in cost of goods sold down here on the income statement type accounts on the bottom. Double clicking it, it's an expense type of account. Here's the 320, double clicking it, there's our invoice once again. Closing this back out, we also know that if we go to the accounts receivable and then we go to the detail accounts receivable by customer, which is the open windows now on the left, we then had the new customer, which was Smith. So if we go down to Smith, we have the 420, there's the 420 again. The total of this report adding up to 2,540. That amount tying out back to the trial balance to the 2,540.27. Then we know that the inventory is at 1,712. If we see the detail and the inventory, we see that the bottom line of inventory is now going to be 1,712 as well. We sold an Epiphone semi-hollow body. We no longer have any of those on hand any longer. Closing, if we see the detail, I double clicked on it, we can go to 010120 and we can see the detail of the activity here. So how it got down basically to 0. I'm going to close this back out. One more check on the trial balance over here. This is where we are at this point in time. So you can check your numbers and then see if there's any issues with them. Notice we will have backup files. So if you would like, if there's a problem with them and you just want to keep pushing forward, you could download the backup file to the current point that we are at, restore it, and then keep pushing forward. Although going back and looking up the problems, if there are any, is really good practice to do.